G'day, Stefan Angelini on the 8th of February for another economic update. Let me run you through what's been happening. So big news, as everyone knows, is that the Reserve Bank has hiked interest rates by another 0.25%, making the RBA cash rate 3.35%, starting to hurt some Australians, banks and hip pockets. But basically, the Reserve Bank is saying that they're going to keep hiking until something breaks. Now, what will break? That's what we're going to look at today. Rates will keep increasing, but will it be businesses that will break first? We don't think so. They're pretty resilient in the Australian economy. Will it be the banks that will break? There's no sign of that happening anytime soon, especially as lending continues to increase, but lending will slow down as interest rates are so high. Third thing is households. They're probably going to be the ones that hurt the most. But the big issue is that in the middle of the year, there's a lot of these people that took advantage of 2% interest rates for 3-4 years that are now starting to come off the boil, and they'll start to roll over onto variable rates. So that's 20 to 25% of loans, they say, is going to go roll off these fixed rate loans. And therefore, their household income is going to be not impacted, but the net, I guess, cash flow at the end of the month will be impacted. If you do want to see what increasing interest rates, what effect it has on your monthly payments for your personal loan, the ABC have a really good calculator in a recent article of theirs. If you do want access to that calculator, reach out, let us know. I'll be happy to send you a link to it. Now let's look at what's happening to properties and property investors. Obviously, with these increasing interest rates, there's less, I guess, investment loans out on the market. So that means less people buying investment properties, less people refinancing their investment properties, more people moving into their properties. This is going to be a big issue for Aussie renters. So that means rents are going to continue to increase, which is going to hurt people that don't own a property, just rent. So let's look at what Macquarie have said about an outlook for Australian businesses. A few main headlines they've said is that, so basically what they've put together is an article indicating the 5 headline issues for businesses in 2023. Number one, I think the issue is going to be rising cost pressures. Obviously, inflation now at 7.8% impacting on businesses. A competitive labour market. It's tough to find people because unemployment is so low and people are demanding higher prices and higher wages. There's pressure on property. So Sydney, for example, the Sydney property market has experienced its fastest price fall in 40 years. And that's going on throughout Australia. The commercial sector has been quite resilient so far. We'll see what happens there, but there are changing dynamics in the commercial sector, especially with work from home and everything that's going on in that environment. Finally, consolidation in the market. So this is where businesses will have to combine forces, buy out other businesses. So if you've got a strong balance sheet, you'll see a lot of these businesses buying up other businesses. If you're a property lover, and especially a commercial property lover, we've seen a lot of issues in this market, and with risk-free returns from government bonds, for example, outweighing returns and income returns on commercial properties. It's been a real sector that we're watching and just seeing what's happened and where the capital value, whether or not it will be impacted and by how much. But the good news is industrial estates are still going absolutely bananas. So there's just been a release for a big parcel of land. It's 41 hectares in Sydney's west, right next to the industrial estates, which is seeing huge demand. And I guess in that industrial space, vacancy rates are at a 0.6% level nationally. And there's just not enough coming on the market. So there's huge demand for the space. Rents are increasing by a huge amount. So they've grown by 21% average, and they continue to rise because there's so much demand and there's so little stock. So good news in the industrial space, but the rest of the commercial market, I guess, watch out. I'm going to take you to a few capital market assumptions presented by BT, and this is where they've really dived deep on what they expect different returns in different asset classes to come out at us. So looking into this a little bit, they do see a lot of capital markets over the next 10 years to still see a 7% plus return. So I'll give you a few of these numbers. So they expect the Australian equities to return a 7.2% annual return. International equities, 7.6%. Emerging markets, they see to be the real outperformer at around about 8%. And unlisted infrastructure still to return around about above 7%. Now, if you think that you want to double your money every 10 years, you need to make a 7% return per year. And it's just really good to see that there's still confidence in these markets. Now, if you look over the last 10 years, an economy like US equities has performed greater than 10% per year on average. So there are still some faith in these equity markets. So we'll see what happens. Importantly, from an inflationary perspective, there's been reports that shipping costs have come down dramatically after being super high in 2021, and they've been coming off the boil a lot in 2022. Now, shipping costs are pretty much cheaper than what they were back in 2018. So that's a good news for inflation. That will flow through to people's hip pockets at some point in the future. For the boring stuff, if you are retired or you do have a superannuation that's got quite a defensive balance, this is all about bonds. There is a new bond cycle dawning. This is an article on Livewire Markets by PIMCO, who's a really large, bond manager. What they're saying is that, look, interest rates will eventually come. Interest rates are quite high, meaning that you're getting a better return on your bonds now. With inflation high right now, but eventually going to come back down. Interest rates will be higher than inflation, therefore your real return will still be high. So it's going to be interesting to watch that bond space, but it's a lot better than it was 2 years ago when the RBA had a cash rate of not much. Let's look at emerging markets. From an international space, the emerging market is the real hot topic. China, Vietnam, Taiwan, India, they're the economies that a lot of people are watching. China's reopening is presenting a lot of opportunities for investors. Basically, China is where Australia was in 2021. They've had lockdowns. People there have cash. Government has money that they want to spend, and inflation is low. So it's going to be interesting to see what happens in China. But if we look at Indonesia and Vietnam, they're really picked to be powerhouses of the international markets for the next few years. There's a lot of production moving there, and they are economies that are growing, even when the rest of the world is facing a recession. Finally, there has been a bit of deals struck up between US and India in a tech deal because they're trying to speed up the supply chain realignment. Now, this is going to hurt China, but really, benefit US and India if they can get this working. Semiconductors are a big thing that go into any kind of telecommunications, phones, and things like that. So if they can get this humming along nicely, they can hopefully decrease their cost of production. Now, for all you, what's the artificial intelligence mob called? The ChatGPT. Obviously, there's been a huge surgence of interest in ChatGPT. Really great article by Afir Asset Management. Posted that in the time to reach 100 million users, it took a phone 16 years to get there. It took Apple 4.5 years to reach 100 million users. It took TikTok 9 months, but now it's taken ChatGPT 2 months to reach 100 million users, which has been absolutely insane. And you can see it's all over the news. But Google has finally unveiled its competitor to ChatGPT. It's going to be called Bard, B-A-R-D. So we'll see how much of a take up that gets and if it is actually as good as ChatGPT. That's my quick wrap up. For all of you who do know me, I went to Red Hot Chili Peppers last night. It was a great event. I may be putting on weight. I might be slightly going bald, but this old bloke still got hit on at the pub. I think I got hit on anyway. So that's boosted my ego for this week. Happy Wednesday. Have a great day, and we'll speak soon. See ya.